Keeping your finances in order can be challenging to say the least, but staying informed helps a lot with that. And especially right now, we could all use some help navigating the lingering effects of the pandemic, especially inflation. Well, we have a lot of great things to show you, so let's get right on the money. Hi, everybody. I'm Jason Wheeler, the Right on the Money guy. Thanks for being here with me for this Right on the Money special. Now, a fair warning, you are about to see a whole lot of me, and I mean a lot. But that's a small price to pay because I've got a ton of financial advice for you that I hope will help you in the upcoming year. Let's kick things off with an issue that I've been looking into for the past year and a half that has already affected many of you and could affect even more of us in the future. I call it forced financing at the auto dealership. I personally stopped the process when I encountered it for the first time, but a lot of people have been all the way through it, and many of them have written to me because they were new to this too. Now, spoiler alert, our reporting has brought about some hope on the horizon with this. A big update on that we're going to tell you about a little bit later on here in this show. First, though, let's rewind back to the summer of 2021 and one of my most watched Right on the Money installments ever, when I went shopping for that shiny new car. I hate long goodbyes, so recently I was all good, saying a very fast bye-bye to my old car. Okay, I was a little bit emotional, but the cool pirouette when they took it away and then the fat check I got for it helped a lot with that. Yes, lately, used vehicles like that have been selling like buttery, syrupy hotcakes on wheels. Dealers have been hungry for them, the cars, not the hotcakes, because they need something to sell since new car manufacturing has been slowed and in some cases stopped because there is a shortage of vital computer chips that make our new cars smarter. So, shopping for a new car, I found dealerships that had almost no selection, and the charts back that up. Auto listings have taken a downhill ride. The Federal Reserve recently showed that inventory is at the lowest point on record. And one dealer texted me that supplies will become a fraction of what they are now. So, sticker shock. I saw a $40,000 car in the showroom that had an extra $15,000 market adjustment added. Forget about offers and counteroffers. Many are selling above MSRP. Yes, dealers are struggling because they don't have enough cars to sell, but they have the upper hand with the inventory they do have. But some dealers told me they didn't want to do business with me if I already had financing from my own bank because, in parentheses, they can make some extra money off their in-house financing. Is that legal for them to essentially force you to use their financing? I asked state regulators about that. They said that the finance code doesn't specifically address this issue, but they are concerned about the practice I described, and they encourage any consumer who has experienced this to contact the state. And a lot of you contacted the state. One person wrote, "I wasn't sure how to file a complaint until I saw the WFAA article. The Texas Office of Consumer Credit Commissioner got complaint after complaint after that." Here's a few of them. They actually told a client in front of us to leave because they had their own financing. I was turned down as a veteran with an approval from Navy Federal Credit Union. The manager stated that it would allow him to make more money on the back end. Even with an offer of cash, they would not sell me the car. The interest rate was about 2.5% higher, but I needed a car quickly, so I agreed. The sales manager told me directly, "If you choose to go with the credit union, this will change the price of the vehicle." And they still go on after that. A few more for you. I handed them a check from my credit union for $50,000. The salesman stated at this time that they were not accepting financing from credit unions. How is a business able to force a customer to use their financing, one person asked. And finally, someone said, when I asked why, he said, because the owner can do what they want. And in this particular case, they kind of can. As for the dealers, they have responded to the consumer complaints that have been made to the state, and I started seeing a trend in their replies. They take outside financing, cash, bank, and credit union. They don't require to use their financing. Over and over again, dealers saying, we're not doing what these customers say we're doing, and over, the investigation ended there if the complaining consumer didn't have documentation. It was your word against theirs, essentially. So get their words in writing. Some advice: start your shopping online. Email them, text them, tell them you have outside financing. Ask if that's cool. If they say no, you have that in writing. If they say yes and you go there and then they tell you no, follow up with them about that in an email or a text. Again, get it in writing. And stay tuned here, because I've got a big update on this, because the forced financing saga doesn't end here. In fact, another problem entered into the conversation, one that we are still dealing with today. Plus, we got the attention of a state legislator. We're going to hear from that lawmaker a little bit later on in this special. Let's switch gears now a bit and talk about something that has become big business here in North Texas: old cell phones. We all have these. So what happens to them? Often we trade them in to get the next model, and in many cases, our old phone doesn't go very far. Is your battery always running low, or is your camera not so great anymore, or your web search is a little slow, or is all of that really fine, but that shiny new model just looks so good? Whatever your excuse or reason, a lot of you have been upgrading your smartphones, and I know that because it turns out that millions of traded-in cell phones each year go to a place right here in North Texas where they are made ready for their next life.
They go everywhere with us and hold our deepest secrets and our undivided attention for hours every day. But eventually, we swap them out for a new cell phone and box them up and send them away. But our old phones don't go too far at first.
If I'm returning a phone in Texas, it's probably coming through here.
It's a good chance that it's going to come through this facility, and we're going to receive it, refurbish it, and resell it from this building.
General Manager Jeremy Purvis gave me a rare tour of this giant Louisville operation.
The second largest of our facilities globally.
Run by Assurant. That's the company behind many cell phone providers' programs that allow you to get credit for trading in your old devices. Last year alone,
we paid about $3 billion back to end consumers for their trade-in values last year.
Many of those exchanged phones came to this non-stop warehouse.
3 shifts, near 24/7 operation,
where thousands of our old devices arrive every day and are quickly transformed into someone else's new-ish device.
How fast do these phones go from that end when they come in to this end down here?
Sure.
When you send them back out for sale?
Sure. Our goal is to have everything from front to back in less than 14 days.
With the help of robots,
taking images at every step of this,
they closely inspect those phones we've traded in.
How many scratches, how deep are the scratches, how does the device look?
Then careful human hands take away the blemishes.
It's getting buffed.
It is. It is.
And after a lot of tweaking and testing,
they are separated by grade and model and condition.
Sorted, then packaged, and
so these are ready to be sold.
Ready to be sold.
Considering how expensive new smartphones are now, the market for used ones has become huge and lucrative.
The overall used cell phone market last year was about $13.3 billion. We've seen about 30% growth year over year in demand for certified pre-owned devices.
Assurant processed 4 million swapped out devices in just this warehouse last year, and that was before Apple recently started selling the iPhone 14. Now, stock traders always want to know how many of those Apple is selling. We don't know, but we know this about trade-ins.
We're a month in. We're setting new records. This is about the 5th consecutive year that trade-in has been setting new volume records year over year.
Jeremy Purvis says we usually hold on to our phones for 3.5 years, but that Apple's newest phone appears to have
early adopters.
People who want the newer model and are trading in phones that aren't that old to get it.
The iPhone 12 is the highest volume trade that we are receiving right now.
Speaking of smartphones, you probably have one of these apps on yours right now. A lot of us are using peer-to-peer apps like Venmo and Zelle, and there's a lot of room for error on these. How to protect yourself from accidentally losing your money after this break. Okay, so at one time or another, I may have sent an email and a text and a top line at work to the wrong person. It happens. But at least I haven't checked this box. I have never sent money to the wrong person, but a lot of you have. Choose your platform. There are so many different ones that allow us to send someone cash using P2P, peer-to-peer payments. LendingTree estimates that 84 out of every 100 of us have transacted this way, and that nearly 1/4 of us, 23%, have sent money to the wrong person like this. And 15% of us have been scammed into sending someone money this way. And those percentages jump up a lot for people who use P2P payments often. Now, the issue is that many people have their peer-to-peer payment accounts linked directly to actual money. Once you hit send, that real money is no longer yours, even if you mistakenly sent it to the wrong person, or if you totally accidentally typed in $500 instead of $5. I've almost done that. Now that we've gone over how often it happens, how easy it is to make a mistake, and how final that can be, if you want to send money P2P, peer-to-peer, but you're actually worried about all of the R4E, room for errors, then some advise that you tie your account to a credit card instead of a debit card. Now, some of the platforms won't let you do that. The ones that do will often charge you a transaction fee of about 3%, and the credit card may tack on some too. But with a credit card, you are protected by Regulation E, which, as Consumer Reports explains, shields you from liability for any payments over $50 in the event of fraud or a payment made in error. But you usually have to notify the financial institution within 2 business days of a problematic payment to qualify for that protection. Coming up, we're going inside Toyota's North American headquarters right here in Plano, and I'm going one-on-one with the Executive Vice President of Sales there about what is coming. They even took us into the secret rooms there. But first, keep your receipts, some life lessons for all of us, especially those of us who own cars. I know how it is when someone hands you a receipt and you're just like, add it to the pile. Now, not that one. That's my receipt pile over there. Be careful, though, when doing that with car-related stuff. I have a friend who just walked down a really long road with the insurance company, and I say walked because he couldn't drive his truck, which was in the shop for months, awaiting an accident repair. And after all that waiting, the insurance company decided to just total the vehicle. But the odometer was damaged, so they offered him far less money because they thought his truck had many more miles on it than it did. So he turned to his most recent oil change receipt to prove that his mileage wasn't that high, but it had an out-of-place digit, so the mileage was badly wrong too. Eventually, he was able to prove this, but it was a huge hassle. I went through something very similar years ago when trying to claim tread warranty on tires that wore out way too quickly. It wasn't my driving either. On the original receipt, when they installed the tires, they had pinned my mileage at something like 6,000 miles when it actually had 60,000. So at 70,000 miles, those tires were only about 10,000 miles old, unless you thought that they were put on at 6,000 miles. I was able to prove it with a car inspection from around the same time that had the correct mileage, but keep those vehicle receipts, maybe in their own pile, and maybe look at them when you first get them just to make sure that the date and the mileage is correct. One more thing you should do, follow me at Jason Wheeler TV on Facebook and Twitter to always be right on the money. Toyota's 100-acre North American headquarters took about 2.5 years to build, and it seems like the time-lapse pace just kept on going because it's been nearly twice that long, 5 years now, since this, one of the largest U.S. corporate relocators in memory, parked in Plano. So much has changed in those 5 years, but as I found out last month, some things haven't. The auto industry is so competitive that Toyota has hallways big enough for delivery trucks to drive through stealthily and deposit secret parts and vehicles into locked bays, all out of sight of what they call the automotive paparazzi. And do people show up to take pictures of something like that if they know it's coming?
Well, they would, but I mean, but we've been able to kill all of that now.
even accompanied by Jack Hollis, the Executive Vice President of Sales for Toyota Motor North America.
So you're here, it's your code red, no entry.
I could only get into one of the rooms.
So this is a code red room. This is really focused on motorsports. Obviously, we had to get you a little pre-approved to come in.
You have to do a background check.
We had to do a lot of background check on you, pal.
there is to know.
In here, Toyota's racing specimens provide inspiration for future street vehicles.
What can we learn from a spring and a shock? What can we learn from a certain tire and tire sizes? Continuous improvement, continuous improvement.
What you and I will see on the car lot in 2 or 3 years might originate from a race car in here, or possibly even from this.
Anything that has been successful, there's something about it.
Or the next big thing could be whatever that is.
Would you like me to show it to you?
I would.
Okay.
But I'm guessing you won't.
But the answer is I'm not going to.
I knew that was coming.
I'd like them to show it to me, and they won't show it to me
You
either.
haven't seen what's in here either.
No, I haven't.
In the headquarters lobby, though, we did get to see the new Sequoia
It's just about ready to launch this month.
and the latest Tundra
I'm proud of our new truck out of San Antonio.
and the next Lexus.
Has not even started production yet.
All of them, of course, full of computer chips.
Hundreds and hundreds and hundreds of chips.
Those chips make cars smarter, but they are still in very short supply, so new vehicles are too. I asked Jack Hollis, when will normal return?
I think it's closer to 24, where I think there's more of an equalization between supply and demand.
One change Hollis thinks will be permanent is how Americans shop for automobiles.
Right now, if they're in the middle of the night with pajamas, they can go online, configure their car, go find it at a dealership. In fact, go all the way through trade-in, finance, purchase it, deliver it all the way to their home. That didn't exist pre-pandemic.
He also believes work from home is here to stay, but with an important caveat.
I better produce at or above the level I was previously expected. That's what I'm pushing us towards.
So if you're watching this and you're wearing PJ pants working, step it up.
Enjoy it. You better be working even harder right now. Let's go.
Apparently, many of Hollis's co-workers must be meeting that standard.
It's a lot less. You see a lot less people.
It can look almost as sparse as a pandemic-era new car lot in here. Some workplace cafes are dark, the grill not as crowded, the company gym on this day was one man's private workout space, and the ever-popular rock wall was available, no waiting. Of the 6,000 local Toyota employees and partners, as many as half now flex work from home on any given day instead of coming into this sprawling, amenities-packed, billion-dollar headquarters that was built not that long ago to house all of them.
Everybody got settled in,
Right.
and then came the pandemic.
Boom.
You got everybody under these roofs
That's
here
right.
together,
That's right.
and then the
That's
pandemic.
If that tremendous workforce evolution isn't enough, Toyota is also evolving away from just cars and trucks and SUVs. Wait, what?
We're talking about moving from an automotive company that's just focused on just vehicles to a mobility company. We can create a different kind of scooter. Or how about somebody who has a person with disabilities? What if they could have something that helps them walk?
So you see Toyota becoming that.
Absolutely.
That makes you really curious about what's going to be in those code red rooms in the Plano headquarters going forward. So I'm going to have to make sure that 5 years don't pass by again before we check in there the next time. Still to come here, my top right on the money of the year. And if you own a Kia, you don't want to miss this. We are right on the money right after this break. It helps to know a really good mechanic. A relative of mine recently needed to have her vehicle seriously repaired and went to one such mechanic who said he wasn't going to perform the several $1,000 fix that it needed because she could get it for free, and you might be able to as well and not even know it. This specifically involves certain Kia vehicles. You've probably heard about a recent Kia recall because of potential engine compartment fires. This is not that. The issue I'm talking about is a voluntary campaign and involves potentially far more vehicles. This affects specifically Sorento, Sportage, and Optima models for certain years that may now need what are called engine long block assembly repairs. Translation here, a very expensive engine replacement. It is number 2 on this list because this is a fix after a fix. Originally, Kia put out a notice back in 2018 called the Product Improvement Campaign number 1803, telling owners that they needed a software update to protect their engines. That affected more than 624,000 vehicles. Now, even though some of those got the update, the engine needs to be replaced. A lot of you have found this out because the person I know recently contacted a local Kia dealer to see if they could assess her vehicle and repair it. And she was told, sure, but you're going to have to come in and drop it off, and there are about 40 others just like it in front of you. And they also told her it's that way at many of the Kia dealerships. So this is a real thing. So she dropped it off, but had to wait several weeks before they could assess her vehicle to determine if it qualified to have a refurbished engine put in free of charge. And then actually ordering and swapping out that engine took nearly a month more, but during that time, Kia did cover the cost of a rental car. You may have to be crafty with the rental, though. They'll cover up to $40 a day, which may have been adequate in more normal times, but rental car rates have been nuts during the pandemic. A last note on this, if you had a mechanic who didn't tell you you could be eligible for this free replacement and you instead paid out of your own pocket because of this issue, you may be due a reimbursement from Kia. I have all of the info on this at Jason Wheeler TV on Facebook and Twitter to help you get fixed up and right on the money. The financial lessons don't end there. I've got an update on that forced financing issue at car dealerships that I was talking about earlier. My reports got the attention of a state lawmaker here in Texas, and changes could be coming. He and other lawmakers are likely to get an earful from one group that is not happy about this dealer practice. We're going to get into that as well. And remember the big freeze of 2021? How could we forget that here in Texas? Because we had a lot of burst pipes in that one. The one tool that you should have this winter to save your home and keep you right on the money. The global computer chip shortage is still causing a vehicle shortage. One report says that the average new car has as many as 100 of those tiny little processors that are in such short supply right now. So the car lots are still pretty empty, but auto dealer bank accounts, those are not empty. Low supply plus high demand equals a recent $44,000 spent on the average auto transaction. That is a record high reported by J.D. Power. They add that even though dealers had way fewer vehicles to sell, last month was their most profitable October ever. Profits up 213% from pre-pandemic October 2019. And dealers are now on pace to reach a record $5,129 profit for each vehicle sold. That's more than double the per car profit last year. Now, some of that cha-ching is from financing, and no doubt some of that is what I call forced financing at the dealership. As I've reported for months now, some dealers across Texas are refusing outside financing because if they can make you use their lender instead of a lender that pre-approved you, they can tack on a little bit of extra to that interest rate and pocket some of the additional profit. The association that represents Texas credit unions wrote about this very topic in September, right after I did my second report on this. They said that the Office of Consumer Credit Commissioner was concerned about this practice, according to an article that they saw on a Dallas area news website. That was my article. And yes, the state regulator that oversees dealerships had told me that they were concerned about forced financing, and they asked consumers to report it. And many of you did. So what now? There is no law against this forced financing at the dealership in Texas, so the Credit Union Association is planning now to take it up with the legislature. But lawmakers don't convene again until 2023, and by then it's expected that the chip shortage and therefore the vehicle shortage may well be resolved already, and that means dealers having to compete for your business again and maybe more willing to accept your outside financing again. Well, here we are, days before 2023, and yes, the chip shortage and the vehicle shortage are still with us. And we're still dealing with forced financing at car dealerships as well. But as I have been teasing you here, my reports have gotten the attention of a state lawmaker, and yes, change could be coming. I've got an update for you, and it's a big one. First, more messages though. He said they don't take outside financing. My cash wasn't good. They will not take outside financing. We went elsewhere. Those come from Texans shopping for vehicles who are still going through what I call forced financing at the dealership, where they won't sell you the vehicle if you have a loan pre-approval from your bank or credit union, or even if you just want to pay cash for the car. Instead, they insist that you finance with the dealer's lenders. When you do that, the dealer can add on to the lender's interest rate that you have to pay, and they get to pocket that extra profit. Maybe more dealers have been inclined to do this because inventory has been so low during the pandemic that buyers have been desperate to get the precious few new cars and trucks available. That has put the dealer very much in the driver's seat, but caution, there may be a sharp turn ahead.
And that's anti-competitive. And Texas is not an anti-competitive state, right? We believe in competition.
State Senator Royce West of Dallas found out about forced financing at the dealership.
On your show. It's the first time I've ever heard of it.
This powerful, right-on-the-money viewer right away thought the same thing that many of you may have thought.
That can't be legal, okay? And then after we did the research, there's no statute that prohibits it.
In fact, the senator couldn't find a law dealing with this practice in any state, but Senator West says it is time to change that, starting right here in Texas.
And so I think that we need to look at it and see what we can do down at the legislature to discourage this type of behavior.
He says he's going to be working on it in the upcoming legislative session. The senator says it'll probably be incremental. He may not be able to score an outright ban on forced financing, but the state might start with just requiring dealers to publicize it if they do this.
Transparency. Should that be something that car dealers, when they're advertising, should be required to say that you don't have a choice in terms of financing, you must finance with us?
Now, people keep asking me to name the dealers forcing their financing on consumers. There may be a lot of them, though. I would rather start a list of dealers who will allow you to use outside financing or cash. So all you dealers out there, let me know. I'm at Jason Wheeler TV on Facebook and Twitter. In today's article posted there, by the way, much more info on this. And Senator West says he's going to keep me in the loop. I will keep you updated and always right on the money. Senator West told me as well that the more constituents who speak up about forced financing, the better chance the legislature will take up the issue. So if this has happened to you, he says, contact your state rep and senator and file that complaint. And of course, I'm going to keep you updated on this issue. Now, let's move on to one of the potential money-saving lessons we got this year in my How To in 22 series. And you're going to want to remember this one as we head into the cold winter months here. This one from back in February as we marked 1 year since the Texas deep freeze of 2021. As we spend a good amount of time in the deep freeze again, a really good friend to have goes by the name of Jones Stevens. That's the name of this key, which so many of us realized we didn't have when we really needed it in last year's February Arctic blast. In many cases, you need a tool like this to turn and open the locked cover that houses your water meter outside, where you will also find a little valve where you can shut off your water at the main, which you should do if your pipes have frozen, because frozen pipes crack, and when they eventually thaw out and your water hasn't been turned off, as we saw so many times in last year's big thaw, it creates a continuously cascading fountain right inside your dwelling. And here's what that leads to. These are numbers from State Farm for all of 2021. Texas, by far, led the country in the number of frozen pipe claims and in the cost of the average claim. That is the number that really tells us we didn't know how to deal with our frozen pipes here. So know where your water shutoff valve is located outside and get a Jones Stevens key and practice opening that cover and finding the valve just in case you have to. Now, those keys tend to sell out in times like this, so at least find a neighbor who has one and let them know you might be needing it. Also, cover your outside faucets, open your cabinets under your sinks to keep the pipes warmer, and let your inside faucets drip while we're below freezing. That allows the water to move so that hopefully you avoid the pipes freezing in the first place and you don't end up adding one of those very expensive ceiling-to-floor water features. More info and a how-to video to get into your water meter and find your shutoff valve with today's post at Jason Wheeler TV on Facebook and Twitter, where we take care of our pipes and we stay right on the money. Another tip that I brought you this year is how to save money and years when paying off your home mortgage. Here's a snippet. Even with interest rates going up, though, you have the power to increase a different kind of rate and save yourself a lot of money. I'm talking about the rate at which you pay your mortgage. Now, usually we think of it as a monthly payment, 12 of them each year. If your imaginary mortgage is $2,000 per month, you pay $24,000 per year. Now, let's rethink mortgage as something that you pay bi-weekly. There are 26 of those time periods in a year, and if we cut your imaginary mortgage in half and you pay $1,000 every 2 weeks, in most months you're still going to pay $2,000. But every several months you're going to have that extra bi-weekly period, so over the year you've paid $26,000. I've plugged in the numbers for our median DFW home, and paying bi-weekly instead of monthly, you would pay it off 43 months faster, and you'd pay $23,000 less in interest. All right, now I want to talk about something that a lot of you would probably rather avoid. I've been there myself. Wills and beneficiaries. They are both important, and I experienced firsthand this year after the death of a relative the chaos that can happen if you don't name a beneficiary. I'm taking my time here starting with this because a will is just one of those things that a lot of us put off as long as we possibly can. I mean, all that paperwork, those details, the intimidating legalese, and thinking about dying are all good reasons to procrastinate. So you may be happy to know that I am delaying talking about wills for an upcoming report. If you don't have a will, or even if you do, I just want you to do one simple thing right here, but you might have to do it several times. A few years ago, there was an estimate that 60% of people with retirement accounts got to that beneficiary blank on there and left it blank. When you die and there's no beneficiary and no will, then your estate may have to go through a probate process. That can be legally expensive, it may get complicated and drawn out, and some of your money may end up going to taxes instead of the loved one you had intended. So while you're living still, go into your life insurance and retirement accounts and name a beneficiary and a backup beneficiary. And thanks to Kiplinger for this. Be exact with those names, spell them right. Make sure also to add in there if it's a junior or a so-and-so the third or so-and-so the second or a new married last name, because an error in name can be very costly. An important note here from Fidelity and Vanguard as well, if you have a will with different names than what is listed on your accounts as beneficiaries, the ones listed on your accounts supersede the names on the will. So make sure that all of that lines up, and check and update these things when there's a big life event, or just do it at least once a year. Here's the thing, it's not just limited to retirement accounts and life insurance though, because I know not everybody has those, although many who don't have them should. Most of us though do have bank accounts. Those don't require beneficiaries and usually don't even ask, but you should ask to name a beneficiary or fill out a payable on death form. Some banks will let you do it online, others you may have to go in person. But as Forbes rightly points out, you listing who inherits the money when you are gone makes it a much simpler process for your loved one to go into the bank and get the money after you expire. If you don't name names and there is no will and your estate ends up tied up in a legal process, Forbes makes another valuable point. Your money could be used to pay some of your debts instead of going to the person you wanted to leave it to. So while you're still living, go in there and name your beneficiaries so that when you're gone, the ones you leave behind will thank you for it. We've talked many times here about having homeowners or renters insurance coverage and making sure you have enough insurance coverage. So hopefully by now you have checked both of those boxes, but we've got another box now, and this is one that is especially important in light of what happened in Florida with Hurricane Ian. In so many cases, people's dwellings were just no longer there, or they were so torn apart and mangled that it's hard to tell exactly what all was there before. Yes, hopefully your insurance company will work with you if you ever have that kind of catastrophic loss, but just to make it easier for them to do right by you, hit record. Maybe do this once a year. Walk around from one room to another in your home, discuss and show in as much detail as possible your possessions. If you know when you acquired them or how much they are worth, say that part out loud too. Do this for the upgraded TV you just bought, your furniture, musical instruments, your jewelry, or your expensive shoe collection if you have those. Also computers and gaming systems, and where possible, include your serial numbers. Now, personally, I would also include my premium leather recliner 8-seat movie room with state-of-the-art 100-inch projection screen and surround sound, and my collection of vintage vehicles in my add-on 4-car garage, if I really had those things. You get the idea here. You are giving a detailed inventory of your home and all of the possessions in it. Record the receipts for the big ticket items too, if you still have them. Just like so many things having to do with insurance, this is a hassle. But also, just like so many things having to do with insurance, failing to do this can create an even bigger hassle if you suffer a huge loss and can't remember some items, or there's a disagreement with your insurer. Video taken with a cell phone and stored in the cloud is a good way to chronicle this. You can also write this stuff down, or your insurer may have an app that does this, and you should know the National Association of Insurance Commissioners has its own app that helps you document your possessions. You can take photos with it as well, and even scan barcodes to get real exact. I have a link to that app and a link to the worst home insurance claim mistakes that you can make. It's in my write-up today, posted on my socials at Jason Wheeler TV, where we always keep good records and keep it right on the money. They went from college students to owning a Texas-based baking empire. Still to come, I'm introducing you to the couple whose bad date turned into a great idea and a multi-million-dollar business. But first, do you avoid organics in the produce section? We compared prices in the spring. All right, this episode is all about organically grown stuff, so we'll start with a trivia question, just because. Of all the organically produced products from Texas, what's the biggest moneymaker? The answer in a minute. I ask, though, because prices for organic goods are usually much higher than what you pay for non-organic. But it turns out that the worldwide pandemic inflation thing that we keep talking about is closing that gap a little bit. An analysis of prices for 29 different products over a couple of recent years found that the conventional foods went up 13.9%, while the organic versions rose by 1.6%. For instance, broccoli, the organic kind, up 24%, but conventional broccoli went up by 141%. Boneless, skinless chicken breasts, the conventional kind, up 44%. The organic variety got 2% less expensive. So again, some of that gap may be closing, but the analysis still found that buying the organic stuff, which started out so much higher in price, still costs about 71% more. Now, Texas has only the 5th most organic acreage, and really it's just a small fraction of the total agricultural footprint here, but more Texas growers have apparently decided that this whole organic thing might be a good investment after all. The number of organic acres here went way down between 2008 and 14, but then rebounded in 2019. The amount of money those acres bring in sales is way up too, which gets us to our trivia answer. The most recent USDA survey I could find says the biggest organic cash maker in Texas, registering $277 million in 1 year, livestock and poultry products like organic milk and eggs. Now, if it feels like that was a trick question because you thought I was only asking about the biggest organic crops, we'll do that one too. With almost $34 million in sales, peanuts, by far the biggest organic cash crop here. Admittedly, I would have guessed cotton, and therefore I would not have been right on the money. Sorry to put this in your head, but we're talking about warm, gooey cookies with the founders of Tiffs Treats, which technically started in Austin, but the idea and the first batch were baked up in a Richardson house by a college student home on winter break.
It started because this one, my lovely wife now, but she stood me up on a date.
Well,
Nice.
I did, but I also apologized. So I made this batch of cookies, drove it over to his house, and they just so happened to still be warm.
Obviously, he fell in love with her and the idea for a business that they would start in an Austin apartment.
We were 19-year-old sophomores in college. There's just something to be said about being naive. We call it young and dumb and naive, and we just didn't know what we didn't know. And that actually served a really great purpose for us because we just kind of barreled through everything.
Now these pioneers of warm cookie delivery have a book hot off the presses to share their business know-how. Some good timing there because last year a record 5.4 million new business applications were filed here in the U.S. New entrepreneurs out there might be hungry for advice from a couple who turned a little kitchen experiment into a $500 million sugar high.
Yeah, I think usually our biggest negative advice is, one, be passionate about what you're doing. If you want to do it and you want to be successful at it, do what you can to make that the primary focus in your life and have the other things be kind of second to that so that you can really put focus on it. And two, never underestimate hard work. It's going to be hard work and it's something that you can control. You can work as hard as you're able, and that will really pay off.
It sure did for them, but there were low points along the way, like losing the lease on their first location in Austin. And then at their second location in Dallas, the cookies were off.
The consistency went way off.
Remember, the cookies got huge, like just giant.
Yeah.
Turns out the ovens here were too hot. That taught them about consistency, communication, and being hands-on. By the way, that one Dallas location apparently got us hooked.
We have like 24 locations. It's our biggest market. And so we have more stores in the DFW area than we do in any other city.
Again, some of their business lessons are in their new book, along with cookie recipes, and they say they didn't leave out any secret ingredients.
No, I wouldn't say leave it out, but you do have to formulate them differently for home because we're talking about smaller batch. So they're tweaked so that it is a home version of the Tiffs Treats recipe, but we're certainly not leaving anything out to make it less good.
So at Jason Wheeler TV on Facebook and Twitter, I've posted an article that has my whole conversation with Tiff and Leon Chen, and they give 13 nuggets of business advice there. It's my gift to you, a baker's dozen of Tiffs Treats tips for all you current and aspiring entrepreneurs. I can't afford cookies for everybody, but I can feed you ways to stay right on the money. A lot of great info today. If you've made it through this entire hour, you are now a Right on the Money super fan. And I'll ask you, join me every Monday and Wednesday on WFAA News at 10 o'clock for a new Right on the Money report. And of course, at Jason Wheeler TV on Facebook and Twitter, you've got it memorized by now, right? The virtual home of Right on the Money. Thanks for watching.